Hello and welcome to Unacademy, India's largest online learning platform, which gives you a world of courses, resources, and content to choose from and help you in preparation of the examination of your choice or also addressing topics of your choice. Welcome to Crack CA exams with us. That is the vertical of Unacademy that helps CA students of the foundation, intermediate, and the final category to prepare for their examinations. What do we get with the Crack CA exams with us vertical? We get top educators, quality content, and a great learning experience. So come, let's crack the CA exams with Unacademy, India's largest online learning platform. Before we move on to the session, a little introduction about the educator today. That's me. Hello everyone, I'm Prathik Gupta. I am a Bachelor of Commerce from Christ College, Bangalore University. I am an associate member of the Institute of Chartered Accountants of India. I'm also an associate member of the Institute of Cost Accountants of India and the Institute of Company Secretaries of India. I'm also a law graduate from Karnataka State Law University and currently a practicing chartered accountant. I am also visiting faculty for CA subjects and an educator for CA students, both offline and online. Prior to starting my own practice, I worked with SR Bartley Boy and Associates, that is the Indian member firm of Ernst & Young Global, also known as EY Global, in the Audit and Assurance Department, and Ernst & Young India in the Mergers and Acquisitions Department. I also worked with the Manipal Group in Bangalore and was the corporate controller of their German subsidiary located in Frankfurt, Germany. It is when I got back from Frankfurt, Germany, is when I decided to quit and started my own practice. I welcome you to my session today, and also I request you to go to the YouTube and type Prathik Gupta, Prathik, and you will get a list of all the other sessions that I have taken so far on various topics. I request you to go through those topics, and if you find them useful, to click on the like button and the share button. And also I would request you to go on to the Unacademy app, go to my profile, that is Prathik Gupta, Prathik, and click on the follow button to get live updates about the timings and the topics of my sessions, so that you can always be there on time and never miss my sessions. I would love to have you in all my sessions and look forward to seeing you there. Also, there are various topics that I have covered on the Unacademy app. You can go through those topics as well. There are various topics like topics on Companies Act. There are about part 1 to 6. Then there is the Indian Contracts Act, the Indian Partnership Act, the Limited Liability Partnership Act, and various other acts have been discussed both on YouTube as well as on the Unacademy app. So I request you to go through that, and if you like it, to give me a feedback, and in case of any questions you have, please feel free to ask me. I would be happy to address those for you. Now, Unacademy also has a Plus platform, which is a subscription based platform. So what do you get when you get onto the Plus program, Plus platform? Firstly, you get daily live classes where you get to chat with your educator, engage in discussions, ask your doubts, and answer polls, all while the class is going on. Yes, you heard it right, all while the class is going on. You do not need to wait for an appointment or another day to clear your doubts. You can do so right on real-time basis. You can clear your doubts with the educator of your choice and the topic of your choice, and also have discussions with the educator regarding various matters. So the first one is about daily live classes. The second advantage of the Plus platform of Unacademy is you get live quizzes and tests which help you evaluate your preparation with the regular mock tests and quizzes, and get detailed analysis of your performance to understand your weakness and strengths, so that you can spend more time on your weakness and lesser time on your strengths, and compensate the time so that your weakness or your weak areas are converted to your stronger areas. The third reason why you should get onto the Plus platform of Unacademy is the courses provided by the Unacademy platform are structured courses. They are structured in the sense that they are in line with the syllabus of your examination, so they help you best prepare for it, and best efforts are made to ensure that no part of your syllabus is left out and everything is covered in the syllabus if you attend the Plus courses provided by the Unacademy platform. And lastly and most importantly, it gives you unlimited access. When by unlimited access, I mean One subscription to the Plus platform gives you access to the whole world of courses, resources, and contents of Unacademy, and all the live and recorded courses from which you can choose your favorite educator, you can choose your favorite topic and view them and listen to them at the comfort of your house or comfort of whichever place you want to, at whatever time you want. There is no restriction on the timing, there is no restriction on the place. You can view the content when you are in between work or in between commute, when you're in a taxi or in a bus or in a car. You can still utilize that time effectively by accessing the Unacademy Plus subscription on your mobile phones, and this can be done at the click of a button. Alright, so I request you and encourage you to become a part of the Plus platform of Unacademy and explore and exploit all the benefits that it has to provide to you. So I strongly recommend you to get on to the Plus program of Unacademy, which is a subscription based program, and further details of which will be provided to you shortly. For those of you who have downloaded the Unacademy Learning app, I thank you very much for your support, and I request your support in the future as well. For those of you who have not yet downloaded the Unacademy app, I request you to download the Unacademy app from your Play Store and register on it using the OTP that will be sent to your mobile phone. It's a very simple and a procedure. You need to enter your mobile number, then you get an OTP, and using that OTP you need to register on it. So what happens once you register on the Unacademy Learning app? Once you register on the Unacademy Learning app, you get access to the world of courses, resources, and content that Unacademy has to provide to you, and you carry all this in your pocket so that you can access it whenever you want, wherever you want, without any restrictions and without any timing issues. In today's world, everyone leads a very busy life, and while we are always chasing or running behind the schedules and timetables, so this app will help you eliminate that part of your problems and help you access the information whenever you want. And in case you have any problem in downloading the app or using it, you can always chat with the people at Unacademy who will be happy to clear your doubts. Once again, for the people who have downloaded and using the app, thank you very much. For the ones who have not yet downloaded the app, I request you to download the app and register on it using your mobile number and the OTP sent on your mobile number, and make the most of this opportunity. Now, like I told you, these are the subscription packages of the Plus platform of Unacademy. The CA Foundation and Intermediate subscription plans of the Plus platform of Unacademy offer you the following packages. The packages are for 1 month, 3 months, 6 months, 12 months, and 24 months. The 1 month package will cost you rupees 3,500. The 3 month package will cost you rupees 8,750. The 6 month package will cost you rupees 14,000. The 12 month package will cost you rupees 17,500, and the 24 month package will cost you rupees 21,000. Now, right here, if whatever you see the code, please, that is not valid. Instead, the code is Prathik, P-R-A-T-H-I-K. This code is invalid too. I just did not update the code. 1 second. Alright, so now, while you are free to choose the package of your choice, please do not forget to use the code Prathik, that is P-R-A-T-H-I-K, to get a discount of 10% on the listed price of the subscription. So, the after discount price of the subscription will be, the 1 month package will cost you rupees 3,150, the 3 month package will cost you rupees 7,875, the 6 month package will cost you rupees 12,600, and the 12 month package will cost you rupees 15,750. And the 24 month package will cost you rupees 18,900. Now this, if you observe, is after a discount of 10% using the code Prathik, P-R-A-T-H-I-K, while making a subscription. While you are free to choose the subscription package of your choice, I would personally recommend you to go for the 12 months or the 24 months package for 2 reasons. Firstly, it is cost effective. If you see the per month cost of the 1 month package and compare it with the per month cost of the 12 month and the 24 month package, it is almost 1/3 of that cost. That is quite a lot of money. Secondly, when you're preparing for the CA Foundation and Intermediate examination, you normally require about a year's time to prepare for both these courses, that is the CA Foundation and the CA Intermediate course. And both these courses are being provided to you under one package. So it makes sense for you to either go for the 12 month or the 24 months package. Having said this again, you're free to choose the package of your choice, and you can make a choice of whatever package duration you want. But whenever you choose the package, please do not forget to use the code Pratik to get a discount of 10% on the listed price. Once again, the 1 month package will cost you rupees 3,150. The 3 months package will cost you rupees 7,875. The 6 month package will cost you rupees 12,600. The 12 month package will cost you rupees 15,750. And the 24-month package will cost you rupees 18,900. All right, so I look forward and I encourage you to become part of the Unacademy Plus platform as soon as possible and exploit and take advantage of the benefits that it provides. Thank you and see you there. Now, like I told you earlier, I have taken various sessions. You can go on to YouTube or the Unacademy app and see all the sessions that I've taken by typing my profile name, that is Prathik Gupta, Prathikgupta, and you will get the list of all the sessions that I've taken in. Please do like and share those sessions if you find them useful, and also give me a feedback and ask me any questions you have. All right, let's start off with the topic today. So far, I have taken various sessions on Companies Act 2013. I have taken sessions on incorporation and matters related thereto. I have taken sessions on allotment and prospectus and allotment of securities, accounts of companies, auditors and audit of companies, acceptance of deposits by companies, the share capital and debentures. So basically, I have taken a lot of sessions on Companies Act 2013 to help you familiarize with the companies. While my first session I took on incorporation and matters, incidental in that we spoke about the various types of companies, that is your private limited companies, public limited company, OPC, one person company, section 8 company, holding company, subsidiary company, and what are the advantages of each, and then what is the memorandum of association, what is the articles of association, what is the procedure for amendment of your memorandum of association and articles of association, and then what is the doctrine of ultra vires, the doctrine of indoor management, the doctrine of constructive notice. I have taken all these sessions. The session on incorporation is present in part 1 and part 2. You can go onto YouTube and find those sessions there. So you can attend those sessions and listen to those sessions in case you want to know more information about the topics that we have done. Then the next topic we did was prospectus. And allotment. Now this was mainly applicable to public limited companies which issues a prospectus, which is nothing else but an advertisement for the company to come for the public to subscribe for the shares of the company. Now a prospectus can be either a full-fledged prospectus or an abridged prospectus, a red herring prospectus, or a shelf prospectus. Details of this are also present in that session which was taken in part 2 and part 1. You can go to YouTube and look at those sessions. And then allotment. Allotment is when the shares are allotted, or this is the final step when anyone applies for the shares of a company. That is only when shares are allotted does a person become a shareholder of the company. Then we took a session on share capital and debentures, where we spoke about the various types of share capitals present in a company. That is the equity share capital and a preference share capital, the features and the characteristics of equity share capital and preference share capital, what is the difference between the two, and also debentures. Debentures is known as security as it is not a share. So debentures, equity share capital and preference share capital together are known as securities of the companies, as it contains both shares as well as debentures, which are not shares. So this session was also present on YouTube. You can go there and find this session on share capital and debentures and find out the various types of share capital and debentures and the characteristics and the differences between the two. Then the next session taken was on acceptance of deposits. Like share capital, deposits is also a source through which a company raises capital when it accepts deposits. Just like your banks accept deposits from the public, companies also can accept deposits. Private limited company can accept deposits only from members, whereas public limited companies can accept deposits from the public at large. So all the procedures, formalities, the limits up to which deposits can be raised, in the event of non-repayment of the deposits, what are the consequences, all that was discussed in those sessions. After that, we took a session on accounts of companies, where we spoke about what are the requirements that a companies need to fulfill as per Companies Act in terms of maintenance of books, audits, in terms of how do the company maintain the accounts, how are they supposed to maintain the accounts and everything. So these sessions on acceptance of deposits and accounts of companies are also present on YouTube. You can go onto my profile Prathik Gupta and go through these sessions and gain more insight and knowledge about it. Then the next session that we took was on payment of dividend. The dividend is the reward that the preference shareholders and equity shareholders expect for contributing capital into the company. While the preference shareholders need to get a dividend year on year, equity shareholders do not necessarily need to get a dividend year on year, and whenever the company feels like, they can declare a dividend, subject to certain conditions and terms and conditions as per the Companies Act 2013. So whenever a company decides to declare dividend or pay dividend to equity shareholders, it needs to follow the guidelines and procedures laid down on the Companies Act 2013, and this topic was discussed in that session on payment of dividend. So you can again go onto YouTube and go through this session to gain more insight on what do you mean by payment of dividend and what is the procedure as per which you can declare and pay dividend to equity shareholders. So all these sessions and many more sessions are present on YouTube. You can go onto them and discuss. Today what we are going to talk about is management and administration of the company under a Companies Act 2013. So as the name says, management. What do we mean by management? Who manage a private limited or public limited company? Please remember, the board of directors manage a company. Now every shareholder cannot manage the company. For a public limited company, there'll be innumerable shareholders. So if everyone starts managing the company, it's going to cause a lot of problems. So the shareholders elect a board of directors who manage the company on behalf of the shareholders, and the board of directors are answerable to the shareholders. So that is to do with the management. So then the board of directors also administer the company, and all those procedures we are going to see in today's session on management and administration of companies under the Companies Act 2013. During the session or anything, if you have any questions at any point in time, please let me know and I will be happy to answer them for you. All right. Okay, let's start off with the introduction. A company is an artificial legal entity distinct from its members. Now, please note, this is the basic characteristics of a company. A company is an artificial and legally distinct identity from its members. That means it is separate and needs to be treated as distinct from its members or board of directors. Thus, the affairs of the company are practically done by the board of directors. Like I told you, the board of directors are the people who run the company on behalf of the shareholders. So they are involved with the management of the company. The board of directors, in carrying out the day-to-day affairs of the company, have to perform the role within their limited powers and the powers which are granted to them. So like any management which has been entrusted certain responsibility, they are also given certain powers which are granted to them by the Companies Act and also by the shareholders and the articles of association of the company, and those directors are supposed to work within that powers that is granted to them. They cannot work beyond that. Certain powers can be exercised by the board on their own, and some with the consent of the company at the general meeting. So like I told you, the company is given certain powers which they can exercise on their own, and remaining powers which could be more serious, which could be for more serious issues, are exercised by the board of directors only with the consent of the company in the general meeting, which means by the consent of the shareholders, the equity shareholders in the general meeting. It could be an annual general meeting or it could be an extraordinary general meeting. So the powers of the directors are split into two: one that they have been explicitly given, And next is which they need to exercise only with the consent of the company, that is the shareholders in the general meeting. The shareholders as owners of the company ratify the actions of the board at meetings of the company. So then if you remember, if you notice this, the shareholders are the main owners of the company. So the board of directors are working on their behalf. So then when certain decisions are taken by the board, that decision needs to be disclosed by the board of directors in the general meeting, and the shareholders of the company have a right to ratify. Ratify means to either approve it or reject it. That is the actions of the board of directors. So this power is there with the shareholders of the company. The meetings of the shareholders serve as the focal point for the shareholders to converge and give their decisions on the action taken by the directors. So the meeting of the shareholders is an important point which help to approve or ratify the decisions of the board of directors. So please remember, as you can get the feeling of the magnitude of things, shareholder meeting is called only for very, very important and serious matters, whereas the routine matters are generally given within the powers of the directors. So the routine matters are handled by the directors themselves. They are given the power to handle these matters, whereas very serious matters or very important matters will again require the approval of the shareholders. Please take about 30 seconds, go through the slide, and then we proceed. Okay, registers. Now we are talking about the administration of the company under the Companies Act. Administration means the routine things that they need to maintain, the documentation that they need to maintain. Every company registered under the Companies Act 2013 has to do this, and that is what we are going to talk about. So now we are talking about registers. Now what do you mean by registers? Once a company registers under the Companies Act 2013, there are various registers that are mandatorily required to be maintained by the company. Let's have a look at those. The provisions relating to maintain the various registers as per the Companies Act 2013 are contained in sections 88 to 91 of the Companies Act 2013. Alright, along with these provisions, the Company's Management and Administration Rules 2014 are also applicable to the maintenance of registers by the company. Relevant provisions relating to maintenance of register are as follows. So the relevant provisions for maintenance of statutory registers is contained in section 88 to 91 of the Companies Act 2013. Along with this, the provisions, the Company's Management and Administration Rules 2014 are also applicable to companies, which specify the manner in which these registers should be maintained. So the Companies Act as well as the Company's Management and Administration Rules 2014 are applicable to the companies registered under the Companies Act 2013. So let's start off. So section 88, Register of Members. The Companies Act 2013. Now we're talking about this. The Companies Act 2013 seeks to provide that every company shall keep and maintain a register of members, register of debenture holders, and register of any other security holders. Okay, so let's just quickly discuss. What do you mean by register of members? Now, who are members of the company? Members of company are the people who are the shareholders of the company. Alright, so whoever takes the equity shares of the company or invests in the equity shares of the company, he becomes a member of the company. So for this purpose, every company is mandatorily required to maintain a register of members, which contains the details like the name of the member, father's name of the member, the registered address of the member, number of shares taken up by the member, the ledger folio of the member, and the number of the sequential numbers of the shares held by the member. So all these details are contained for each member or shareholder of the company separately, and each of them is given a separate ledger folio. So let's look at register of members. Maintenance of register of members. Now where we are here, we are talking about this. Okay, requires a register of members to be maintained, and that the holding of each class of equity and preference shares by each member residing in or outside India will have to be shown separately in the register of members. So like the name says, the register of members will separately contain details about the equity shareholders as well as the preference shareholders, and also those members that are present in India and those members that are present outside India. So the register of members will contain all this data. The form and manner in which these registers are to be maintained is contained in Rule 3 of the Company's Management and Administration Rules 2014, whereas Rule 5 provides for the maintenance of register of members. So we all got to know now that the register of members is a mandatory document that needs to be maintained. Now, how it is to be maintained and what are the details that need to be provided in that is contained in Rule 3 of the Company's Management and Administration Rules 2014. So every company registered under the Companies Act is required to comply with this requirement and maintain a register of members containing complete details of all the members, whether they are equity shareholders or preference shareholders. It should contain all the details of those members in them. Please take about 30 seconds, go through this slide, and then we proceed. Any questions? Please ask me. We are discussing about the maintenance of register of members. Then, time period for entries in the register. As per rule, now we are talking about time period where we are here. As per Rule 5, entries have to be made in the register within 7 days of the date of approval by the board or committee thereof by approving the allotment of shares or transfer as the case may be. So like I've discussed in my session on prospectus and allotment of shares, allotment is the final process after which a person becomes the shareholder of the company. Unless and until there is an allotment made, a person cannot become the shareholder of the company. So once an allotment is made by the board of directors or a share transfer is approved by the board of directors, within 7 days of such approval, such entries should be made in the respective place in the register of members. Whether it is a new allotment or whether it is a transfer of shares, the respective entries should be made within a period of 7 days mandatorily. In case it is not made, then there will be penalties for the people who are in charge of the company at that time. Okay, so time period for entry in the register is 7 days from the date of approval of an allotment or transfer by the board of directors, whichever is applicable. Place where the register shall be maintained. Now we are coming to the place where the register will be maintained. One second. Rule 5 also states that the register shall be maintained at the registered office of the company unless a special resolution is passed in a general meeting authorizing the keeping of the register at any other place within the city, town or village in which the registered office is situated, or any other place in India in which more than 1/10 of the total members entered in the register of members reside. Now, this is an important concept. Now, normally, the register of members should be kept in the registered office of the company. Wherever is the registered office, as per the MCA records, as per the ROC records, the statutory registers, that means the register of members, should be kept in the registered office of the company. But sometimes the company, for various reasons, may not be able to keep or may not be able to want the register of members to be kept in the registered office. In that case, what does the company do? In that case, they need to file or they need to pass a special resolution, okay, of the members of the company, that is the shareholders of the company, in an extraordinary general meeting or the annual general meeting, as the case may be. Now, what do you mean by a special resolution? A special resolution is nothing else but it means that the resolution shall be passed by at least 3/4 of the members present and voting. All right, so at least 75% of the members present and voting should vote in favor of it for it to be passed as a special resolution. Okay, so then if a special resolution is passed, then the company can maintain its registers in a place other than the registered office of the company, but in the same town, city, or village in which the registered office is situated. Okay, and if they want to situate it in any other part of India, then at least 1/10 of their members should reside. Then they can put it in any other place in India, also subject to special resolution. All right. So the other information also to be entered in the register. Now we are talking about this one. Any order passed by the authority attaching the shares or relating to dividends is also required to be referred in the register of members. Hypothecation and pledge of shares is also required to be entered in the register of members as per Rule 5 subsection 7 and 5 subsection 8. So not only the details of all the members has to be entered into the register of members, but also if any of those shares are pledged or hypothecated by those members, that details also will have to be one second. If there is a hypothecation and pledge of securities, then those details should also be entered into the register of members as per Rule 5 and 5.7 and 5.8. Particulars in the register. Rule 3, now I am here. Rule 3 prescribes that every company limited by shares shall from the date of its registration maintain a register of its members in Form MGT1. In case of a company not limited by shares, the register shall contain the following particulars in respect of each member. Before we proceed, what do you mean by a company limited by shares? Anyone? Can you answer it? What do we mean by a company limited by shares? Now please remember, the main feature of a company is, one second, is limited liability. Limited liability means the liability of the members is limited only to the extent they have committed in the memorandum or the amount of unpaid amount on the shares held by them. They cannot be called to contribute more money than these amounts. That means their personal assets cannot be touched. So one of the types of company is a company limited by shares. So let's say A and B are shareholders in the company and they both take up 2000 shares each of rupees 10. Now, their liability to the company is only limited to the extent of 2000 rupees shares into 10, that is 20,000 rupees. So the company cannot ask them to pay anything more than that. So in case while taking up the shares of the company, they have paid the entire 20,000, their liability ceases. The company cannot ask them for any other money other than the amount of shares held by them. And in case the shares held by them are fully paid, the company still cannot go ahead and ask them for any money. All right. So now the Rule 3 prescribes that every company limited by shares shall from the date of its registration maintain a register in the form MGT1. So MGT1 is the register of members. It contains all the details of the members. In case of a company not limited by shares, the register shall contain the following particulars of each member. Please take about a minute and go through this slide and then we proceed. The maintenance of register of debenture holders. So just like you maintain a register of equity shareholders or the members of the company, you also need to maintain a register of debenture holders. Debenture holders are nothing else but the people who hold the debentures of the company when debentures are issued to them. So we are talking about maintenance of register of debenture holders. Section 88(1)(b) of the Act refers to the form and manner of maintenance of register of debenture holders, which corresponds to Rule 4, which states that every company which issues or allots debentures or any other security shall maintain a register in shall maintain a separate register for debenture holders or security holder in form MGT2. So MGT1 is the register of members, whereas MGT2 is the register of debenture holders, and every company that has issued debentures has to mandatorily maintain a register of debenture holders in form MGT2. All right. Updation of rewards of members. Rule 5 also states that the changes relating to the status of the member should be effectively captured and updated accordingly in the relevant register. If any change occurs in the status of a member or debenture holder or any other security holder, whether due to death or insolvency or change of name, or due to transfer to Investor Protection Education Fund, or due to any other reasons, entry shall be made in the respective register. So now please remember, this is a very important topic. We are talking about updation of rewards of members. Now the status of your shareholders or debenture holders might change from time to time. That could be due to either the death of the member or the debenture holder, or the insolvency of the member or the debenture holder, or basically if they want to change their name or change of address. Whatever the changes are relating to the debenture holder or the member, that shall be updated in the registers respectively. Now also, if you read this point, Investor Education and Protection Fund. Now I have taken a session last time on payment of dividend. In that I have discussed in detail the Investor Education Protection Fund and what is it and what are the provisions relating to that. So in case you have missed it, you can please go through those, go through the session on declaration and payment of dividend on YouTube, and benefit and know about what Investor Education Protection Fund is. Investor Education Protection Fund is a fund that is created under the Companies Act 2013 that gets contribution from various sources, and various amounts are transferred by companies into the Investor Education and Protection Fund. Like for example, if a dividend is declared and if dividend is not paid for a period of 7 years from the time it is declared, then the amount goes into the Investor Education Protection Fund. If there are debentures and the debentures are not paid, or there are preference shares and the preference shares are not paid, then in that case all those unpaid amounts goes to the Investor Education and Protection Fund. The person who has a claim on these can still go to the Investor Education Protection Fund and raise a claim against this, but those are subject to a lot of terms and conditions, for which I have discussed in my topic on declaration and payment of dividend. So I request you all to go through that session to know more about Investor Education and Protection Fund. Okay, or due to any reasons, entry shall be made. So also one more reason is when the amounts are transferred to Investor Education and Protection Fund for non-payment of payment of dividend, then also the shares in respect of which dividend is unpaid are transferred to the Investor Protection and Education Fund. So this aspect will also be needed to be updated in the respective registers. Then we have the index of names. Section 88.2 mentions that every register maintained under Section 88.1 shall include an index of names included there. That means a sequential index of the names of all the shareholders and debenture holders. The relevant rule here is Rule 6 of the Companies Act. Rule 6 of the Companies Act, Companies Management and Administration Rules 2014, which state that the maintenance of index is not necessarily where the number of members is less than 50. It also states that the company shall make the necessary entries in the index simultaneously with the entry for allotment or transfer of securities in register. So the Companies Act or the Companies Management and Administration Rules makes it clear that where the number of members is less than 50, then in that case it is not mandatory to maintain an index of the members or debenture holders. It is optional if the company wants to, and also all the registers should be updated for any transfer or allotment of securities as the case may be. All right, this is important. Please take about a minute and go through the slides and then we proceed. Any questions, please ask me. right? Okay. Now we are here. Register index of beneficial owner to be maintained of a depository. Section 88.3 is basically an enabling provision which sets out that the register and the index of beneficial owners maintained by a depository under Section 11 of the Depositories Act 1996 shall deem to be the corresponding register and index for the purpose of this act. Now, what do you mean by a beneficial owner? Now, please remember, sometimes the shares are held by an authority on behalf of someone else. So, even though the shareholder is someone, but it is held for the beneficial ownership of someone else. So, in that case, like for example, depositories are bodies which hold the shares on behalf of the actual shareholder. So, in that case, they need to maintain a register of beneficial owners. All right, and if they maintain a register of beneficial owners and also an index of the same. One second. Under Section 11 of the Depositories Act shall be deemed to be the corresponding register and index for the purpose of this act. All right, then we have a foreign register. What do we mean by foreign register? The most important part, we are here. The most important part of Section 88 is its subclause 4, since it deals with foreign register. Section 88.4, read with Rule 7, entitles a company to maintain a foreign register of members, debenture holders, or any other security holders or beneficial owners showing the holding of persons residing outside India. So there is also a case where the actual members or the shareholders or the debentures of a company reside abroad. So for that purpose, to maintain records of those members or debenture holders who reside abroad, then a foreign register has to be maintained, which contains details of all those shareholders, debenture holders, security holders, or beneficial owners who reside abroad, with all the details of their residence abroad. Compliances. The compliances with respect to maintenance of foreign register are as follows. A company which has share capital or which has issued debentures or any other securities may, if so authorized by its articles, keep in any country outside India a part of the register of members, or as the case may be, of debenture holders or any other security holders or beneficial owners resident in that country. Now please remember, if a company has members or debenture holders or beneficial owners or security holders who are residing abroad, then the company has a choice, if it's so authorized by its articles, to maintain a separate register in that country in which most of its foreign members, debenture holders, beneficial owners, or security holders are present. But obviously, it should have some sort of operations in that company, in that country, or a branch in that company, in that country. In case it doesn't, then there is no way it can maintain the register in that country. And obviously, as per the law, it needs to maintain the register in its registered office. Okay, and then it needs to pass a special resolution if it needs to maintain these registers in any other place other than its registered office. So please take about a minute, go through this slide, and then we proceed. Take about a minute. Please go through this slide and then we proceed. Okay, now we are here. The company shall, within 30 days from the date of opening of any foreign register, file with the registrar of companies notice of the situation of the office in the prescribed form form number MGT3 along with the fee where such register is kept. And in the event of any change in the situation of such office or its discontinuance, shall within 30 days from the date of such change or discontinuance, as the case may be, file notice of the ROC with such discontinuance. So like I told you, if in case it needs to maintain its foreign register in a foreign country, it needs to open an office or a branch there where it can maintain the foreign register. In case it does not have a branch or a office in the foreign country, it cannot maintain a register anywhere else. So whenever it decides to open a branch in a foreign country, it needs to file with the registrar within 30 days of opening of that office about the location of the office and which country and whatever. And then if it decides to discontinue that office within 30 days of that discontinuance, again it needs to file with the registrar of companies of such change or discontinuance. Okay, a foreign register. Now where am I? Now we are here. A foreign register shall be deemed to be part of the company's register, principal register of members, or of debenture holders, or of any other security holders or beneficial owners, as the case may be. So a foreign register is part of the hi Krishnan Kumar Rawat. Hi Pratham, how are you? Krishna Kumar sir, इस चैप्टर की कोई वीडियो भी अवेलेबल है यूट्यूब पे? It should be, Krishna Kumar. I'm not too sure, but in case you have any questions, you can ask me here. I will be happy to help you. Okay, so a foreign register shall be deemed to be part of the company's register, and in case of members of debenture holders or security holders, then the foreign register shall be maintained in the same format as the principal register. That means it shall be the same format in which the main register of members, register of debenture holders, security holders and beneficial owners is maintained. Then we come to the next point. A foreign register shall be open to inspection and may be closed, and extracts may be taken therefrom, and copies thereof may be required in the same manner as is applicable to the principal register, except that the advertisement before closing the register shall be inserted in at least 2 newspapers circulating in the place where the foreign register is kept. So firstly, it shall be open for inspection, the foreign register, and next you can also close it. That means when you have maintained it at that foreign place, you can decide not to do so. Then in that case, you need to give an advertisement in the country or the foreign location where the foreign register is maintained. All right, and also extracts can be taken from the register, and because it contains the same format as the principal register, you can also take extracts or copies from the register of foreign register. All right, please take about a minute, go through this slide, and then we proceed. Okay, so we have discussed these points. We've discussed this, this, and this. All right. Any questions? Please ask me. Okay, now we come to this. If a foreign register is kept by a company in any country outside India, the decision of the appropriate competent authority in regard to the rectification of the register shall be binding. The entries in the foreign register maintained under section 88(4) shall be made after the board of directors or its duly constituted committee approve the allotment of or transfer of shares, debentures, or any other security as the case may be. Just like the case of register of members, register of debenture holders, register of security holders and beneficial owners, entries in a foreign register can be made only after the allotment or the transfer of shares. The allotment, where is the allotment? The allotment or transfer of shares, debentures, or other securities, as the case may be, is approved by the board. So only after allotment and approval from the board can entries in the foreign register be made. Then the next point, every such duplicate register shall, for the purpose of this act, be deemed to be part of the principal register. So even though this is an extract from the principal register, that is the register of members, this duplicate or a secondary register shall deem to be part of the principal register. That means the entries in both these registers should always be the same, and there should be no discrepancy between the two. Okay, then the company may discontinue the keeping of any foreign register, and thereupon all entries in that register shall be transferred to some other foreign register kept by the company outside India, or to the principal register. Please remember, the principal register is the register of members, debenture holders, security holders, or beneficial owners, and it is only optional for the company to maintain a foreign register if it feels like. The day it decides not to continue or maintain a foreign register, in that day it can close the foreign register, and then all the entries have to be mapped or transferred to the principal register, which is your register of members or debenture holders. Subject to the provisions of section 88 and the rules made thereunder, with respect to duplicate registers, the shares, or the case may be debentures or any other securities registered in any foreign register, shall be distinguished from the shares, or as the case may be debentures or any other security. All right. So subject to provisions of section 88 and rules made thereunder, with respect to duplicate registers, the shares, or as the case may be debentures or any other security registered in any foreign register, shall be distinguished from the shares, or as the case may be debentures of the other security. So it simply means whenever there is any duplicate registers maintained, then the distinguishment should be made between the foreign register as well as the principal register and the securities contained in both. Please take about a minute, go through this slide, and then we proceed. Okay, now let's take an example. Mr. John purchased the shares of Max Hairstyles Private Limited at market price in the name of his daughter Miranda, who is 4 years old. Mr. Johns, Mr. Johns, the director of the company, has approached you to advise him on the updation of the said change in the register of members, since Miranda, being a minor, is incompetent to contract in her capacity. So, Mr. John has purchased shares of Max Hairstyles Private Limited at market price in the name of his daughter, Miranda, who is 4 years old. So now the question is, what name or how will you update the register of members, because Miranda is a minor and she is incapable of contracting? So the answer is, since the minors are not competent to enter into any contract, thus their names cannot be entered in the register of members. Therefore, Mr. John is advised that while filling MGT1 and MGT2, the names of the minor can only be entered only if the details of the guardian are present. Thus, John's name shall appear in the register of members of Max Hairstyle Private Limited, since Miranda is a minor. So like the answer goes, because Miranda is a minor, her name cannot be entered in the register of members. So that's why the guardian's name, that is Mr. John's name, will have to be entered in MGT1 and MGT2, that is the register of members or register of debenture holders, as the case may be, until Miranda becomes a major. So that's your answer. Please take about a minute, go through this question, and then we proceed. Okay, let's take another example. Now, Mrs. and Mr. Sharma recently got married and jointly purchased the shares of New Hopes India Private Limited on 15th August 2016. Mr. Sharma intimated the company that only the name of his wife should appear in the records of the company for the shares purchased by them. The secretary of the company is not sure whether this is possible, given that the shares are held in the names of both the persons. So given in the question is Mr. and Mrs. Sharma purchase the share in their joint names. But Mr. Sharma tells the company that please enter only the wife's name, that is Mrs. Sharma's name, as he does not want his name to come. So now the company secretary of the company is not sure as to what name will appear. Will it be Mr. Sharma or Mrs. Sharma alone, or both of them, as the shares are held in the names of both persons? So let's look at the answer. Joint owners of shares may request the company to enter their names in the register in a certain order or execute transfers to have their holdings split, with the result that part of the holding is entered showing the name of one holder and one part showing the name of another holder. However, the condition of Mr. Sharma that only the name of his wife should appear in the register as a member cannot be catered to, although the names can be entered in such order that the name of his wife appears first. The reason for this is that articles of most companies provide that in case of exclusion of the other joint holders, and for this purpose seniority shall be determined by the order in which the names stand in the register of members. So now, as per the Companies Act and as per the articles, whenever a share is held in a joint name, that means two or more people are the owners of the shares, then what are the options available? Firstly, you can tell the company the order of the name. That means whose name will come first and whose name will come second, as the name which comes first is always considered to be senior than the person whose name comes second. And the second option you have is that if they are holding, let's say, 10 shares, they could transfer 5 shares to one another. That means if they jointly hold 10 shares, you could make an arrangement where each of them hold 5 shares, so that both their respective names can come in their respective shares. But for that, the shares will have to be transferred from their joint names to individual names. Okay, but so current situation, Mr. Sharma's request of putting only his wife's name in the register of members cannot be entertained, because as per law both the names should come. He can decide on the order of the names, but he cannot decide to let go of a name. Please take about a minute, go through this example, and then we proceed. Take about a minute, go through this, and then we proceed. These are examples on how the names or how the register of members or security holders should be updated. Take about 30 seconds more, then we proceed. Okay, now declaration. Now, next topic that we're going to talk about is declaration in respect of beneficial interest in any share. This section seeks to provide that a declaration is to be given to the company by any person who is a member but not holding the beneficial interest of such shares. That means who's not the beneficial owner but who's actually holding the shares on behalf of someone else. Then such a person has to give a declaration to the company of such effect. Okay, let's read further. Further, the person holding beneficial interest shall declare the nature of his interest and other particulars on those shares to the company. So when the shares are registered in someone else's name, but the beneficial owner is someone else, then the person who is holding the beneficial interest shall declare the nature of his interest and other particulars on those shares to the company. Any changes in the beneficial interest also is to be declared. So let's say, for example, a person becomes the beneficial holder or changes, he transfers his beneficial interest to someone else. That transfer of beneficial interest also has to be declared to the company in the time specified by the Companies Act 2013. The section also provides that the company shall make note of all the above incidents as and when they occur and intimate the same to the ROC within the time and manner as prescribed in Rule 9 of the Company's Management and Administration Rules 2014. So like I said, whenever there is any change in the beneficial interest, or there is transfer of beneficial interest from one person to the other, or there is beneficial interest ceasing, all these changes should be intimated to the registrar of companies in time through the various forms, and he should be kept informed about what these changes are. Whether any declaration under this section is made to a company, the company shall make a note of such declaration in the register concerned and shall file within 30 days from the date of receipt of such declaration by it a return in the prescribed form with the registrar in respect of declaration and such fees and additional fees as may be prescribed. So again, this is a continuation of the previous point. Whenever the company comes to know about the beneficial interest or the changes in the beneficial interest, the company will file the form with the ROC intimating it about these changes in the beneficial interest within 30 days and with the payment of the prescribed fees. Please take about a minute, go through this slide, and then we proceed. Take about a minute, go through this. Okay, now where are we? We are on this point. We are on this point. No right in relation to any share in respect of which declaration is required to be made under this section, but not made by the beneficial owner, shall be enforceable by him or any other person claiming through him. So, if the declaration is not made by the beneficial owner of the shares, then no right shall be enforced by him. Then the person in whose name the share is registered, he only will enjoy those rights and rewards. Then the beneficial owner will not, unless he gives a declaration. Nothing in this section shall be deemed to prejudice the obligation of a company to pay dividend to its members under this act, and the said obligation shall on such payment stand discharged. So if there is no declaration given by the beneficial owner of the share about his interest, then the company will give the dividend to the person whose name is appearing in the register of members, even though he may not be the beneficial owner. In that case, if the company declares the dividend, then the company is said to have discharged from its obligation. Okay. Now, for the purpose of this section and section 90, beneficial interest in shares includes directly or indirectly through any contract, arrangement or otherwise the right or entitlement of a person alone or together with any person to exercise or cause to be exercised any of the rights attached to the share, receive or participate in dividends. So basically the beneficial interest means that a person who is the actual beneficiary, the owner of the share, should enjoy the rights associated with the shares and also the benefits in terms of dividend associated with that share. So in case he does not declare it, he does not enjoy those two rights. Take about a minute, go through the slide, and then we proceed. Okay. Penalty for default under section 89(5) and 89 subsection 7. Two kinds of penal provisions are included under section 89. The first one is related to persons required to make the declaration. Section 89(5) applies to those who are required to make a declaration but fail to do so. The declaration is about the beneficial interest. The penalty for their failure without any reasonable explanation is fine, which extends to rupees 50,000 and additionally rupees 1,000 per day during which the failure continues. So if any person fails to disclose his beneficial interest in any shares, in that case he will be liable for a penalty of rupees 50,000 and additionally rupees 1,000 for every day during which the failure continues. Next, in relation to company, section 89(7) refers to the company which fails to comply with the provisions of section 89, makes punishable the company and every defaulting officer with a fine which shall not be less than rupees 500, which may go up to rupees 1,000, with further fine of rupees 1,000 per day during which the failure continues. So even the company shall be liable to pay a fine of rupees 5,000, which may go up to 500, which may go up to rupees 1,000, and with a further fine of rupees 1,000 per day during which the failure continues. Exemption to government company. In case of government company, section 89 will not apply. Notification dated 5th June 2015. The above mentioned exemption shall be applicable to a government company which has not committed a default in filing its financial statements under section 137 or annual returns under section 92. So a government company which has not defaulted in filing its financial statements or annual returns, this section of section 89 will not apply. So here we see section 89 not to apply in case the company has not made a default. The government company has not made a default in filing its financial statements or annual return under section 92 with the registrar. All right, please take a minute, go through this, then we proceed. Go through this carefully and then we proceed. Now, let's take an example. Ms. Hema gifted the shares purchased by her of the company Bio-Optics Limited to her sister Kathy. Hema had purchased these shares on the occasion of her birthday in February 2017. However, neither Hema nor Kathy were aware that they had to intimate about the transaction of transfer of such shares as a gift to the company. Discuss the same right in light of provisions of section 89. So the gist of the case is Hema had purchased the shares of the company in February 2017. Now those shares she had gifted to her sister Kathy on her birthday. Now Hema and Kathy did not know that they need to intimate this to the company about the transfer of shares by way of gift. So now we have to discuss the same in terms of section 89. So let's look at the answer. The provisions of section 89 of the Act dealing with declaration of beneficial interest in shares by a person to the company does not apply in a civil suit where the title of shares is in dispute. In Ahjamiya Tiranjay Mohajid versus Pir Pasha Tiranjay Mohajid 1987, where the shares are gifted away, they become the property of the donee. Hence, the provisions relating to the declaration of beneficial interest are not applicable. So in this case, as the shares are gifted, the provisions of section 89 will not be applicable, as clearly the person to whom the shares are gifted will be the beneficial holder or beneficial interest in the shares. Because the shares are gifted to her, she has a gift deed. So based on the gift deed, she will be the beneficial interest or beneficial owner of the shares. Now, register of significant beneficial owners in a company. Every individual who, acting alone or together or through one or more persons or trust, including a trust and persons resident outside India, holds beneficial interest of not less than 25% or such other percentage as may be prescribed in shares of a company or the legal shares of the company, or the right to exercise or the actual exercising of significant influence or control as defined under clause 27 of section 2 over the company, which is referred to as significant beneficial owner, shall make a declaration to the company specifying the nature of his interest and other particulars in such manner and within which period of acquisition of beneficial interest or rights as the case may be. So now this topic deals about the maintenance of register of significant beneficial owners. So if any person who owns a beneficial interest of more than 25% of the shares in a company, he shall make a declaration to the company specifying the nature of his interest and other particulars as may be prescribed. Every company shall maintain a register of the interest declared by individuals under subsection 1 and changes therein, which shall include the name of the individual, his date of birth, address, details of ownership of the company, and other details as may be prescribed. So like we saw, firstly, if there is a beneficial interest of more than 25%, he needs to declare that to the company. Then every company shall maintain a register of the interest declared by individuals and the holders of beneficial interest. They need to maintain the details such as name, date of birth, address, details of ownership of the company, and other details as may be prescribed. The register maintained under subsection 2 shall be open to inspection by all the members of the company on payment of fees as may be prescribed. So any member of the company can inspect the register of beneficial ownership in the company on payment of a prescribed fee and during reasonable business hours. Please take about a minute, go through this, we will proceed. Okay. Every company shall file a return of significant beneficial owners of the company and changes therein with the registrar containing names, address, and other details as may be prescribed within such time, in such form and manner as may be prescribed. So whenever there is a change in the beneficial ownership of the company, such changes shall be intimated by the company to the registrar in the respective form and within such time as may be prescribed. A company shall give notice in the prescribed manner to any person, whether or not a member of the company, whom the company knows or has reasonable causes to believe. The information required by the notice under section 5 shall be given by the concerned person within a period not exceeding 30 days as from the date of notice. The company shall, where the person fails to give company the information required by the notice within the time specified therein, where the information given is not satisfactory, or on an application made under subsection 7, the tribunal, after giving an opportunity of being heard to the parties concerned, make such order restricting the rights attached with the shares within a period of 60 days on receipt of application of such period as may be described. So now when the company has a doubt about who is the beneficial owner or who is receiving the beneficial interest in those shares may give a notice to the person and ask him for information. And that person is supposed to respond within 60 days from the receipt of that notice. And if in case he doesn't, or if the reply given is unsatisfactory, the company may refer the case to the company law tribunal, which may give both the parties opportunity of being heard and then decide and pass an order accordingly. Okay, power to close the register of members or debenture holders or the security holders. The said section is divided into two parts. Subsection 1 deals with the time limits for which the register of members is allowed to be closed, and subsection 2 mentions the penalty for contravention of the provisions of subsection 1. So now we are going to talk about when and how can the register of members be closed. All right. So now the section seeks to provide that a company may close the register of members, debenture holders, and other security holders by giving minimum 7 days notice or such lesser period as specified by the Securities Exchange Board of India. So now what does this mean? A company may close the register of members or debenture holders or other security holders by giving a minimum 7 days notice or such lesser period as may be specified by the Securities Exchange Board of India. So the company basically will have to give a notice to all the members and debenture holders that we are going to close the register of members for a week or so, or for whatever period, 21 days or 25 days or 1 month, and the notice should be a minimum of 7 days. Or if there is a lower period prescribed, then the lower period. Section 9(1) further states that the register may be closed for any period not exceeding 30 days at one time and an aggregate for 45 days in 1 year. So a register of members cannot be closed for a period of more than 30 days at one time and 45 days in total. Now, when is the occasion on which the register of members can be closed? Obviously, when the company is declaring dividend, right? It needs to have a cutoff date. That means that as on the cutoff date, whoever name appears in the register of members or equity shareholders, only they will be paid a dividend. Similarly for preference shareholders, all right? Or for a debenture holders as that fact, because debenture holders are supposed to be paid interest. So what if the case is there is a transfer or transmission of shares that is pending? In such a case, the company needs to decide on a cutoff date that as on so and so date, I will close the register of members for a period not exceeding 30 days at once and not exceeding 45 days in one aggregate in 1 year. It is important, okay, it is also important to note that where the private companies have been exempted from issuing public notice in papers, provided it issues 7 days notice to its members before effecting closure of members. So this is interesting to know that private limited companies do not need to give a public notice, whereas public companies need to give a public notice that they are going to close their register of members for 30 days or 45 days as the case may be. But private limited companies, it's enough if they just give a 7 days notice to its members before effecting closure of registers. All right, so please take about a minute and then we proceed. Okay, are we done with this? All right. Now we're going to come to the another important topic, that is annual. We are going to discuss about the provisions of annual returns by companies under the Companies Act 2013. This is a very important concept, and it is considered as a very serious default in case a company fails to file its annual returns with the ROC, Register of Companies. The provisions for preparation and filing of annual return of a company are contained under section 92 of the Companies Act 2013. The section is particularly important from the compliance point of view, since this is an annual compliance and essentially captures all the important events that have taken place in the company during the financial year. Every company is required to file with the ROC an annual return as prescribed in section 92 in form MGT 7 as per rules 11 subsection 1 of the Companies Management and Administration Rules 2014. So every company, whether it's a private limited, public limited, OPC, or section 8 company, needs to file the annual return as per the Companies Management and Administration Rules 2014 in the form MGT 7 with the Registrar of Companies within the prescribed time. The particulars contained in an annual return to be filed by every company are as follows. So these are the following particulars that need to be filed by the company with the Inform MGT 7. First one, the registered office, principal business activities, particulars of its holding and subsidiary companies and associate companies. So every company will have to fill in the details of its registered office, principal business activities, with particulars of its holding, subsidiary and associate companies in the form MGT 7. Relevant space is provided in form MGT 7 where these details have to be provided by such a company. Next, it has to provide details of its shares, debentures and other securities and shareholding pattern. That means it will have to give the breakup of all the shares and debentures in terms of what is the authorized share capital, what is the subscribed capital, what is the issued capital, and what is the paid up capital. Similar details need to be given for debentures and other securities like your preference shares and other things, and your deposits if there are any deposits taken and are outstanding, and also the shareholding pattern. That means what percentage of shares are held by promoters, what are held by outsiders, or what portion of the promoters are resident, what are non-resident and outside India, and what are the other shares held by other body corporates or other entities. All these details in detail have to be given in the form MGT 7. Next detail it needs to provide is its indebtedness. That means the loan liability that the company has. The indebtedness could be in the form of secured, unsecured loans from individuals or the companies, or loans from banks and other financial institutions as to how much was the opening balance during the year, how much they have received during the year, how much they paid off during the year, and what is the closing balance. All these details need to be entered in form MGT 7. Okay, then they need to give the members and debenture holders along with changes there since the close of the previous year. This is where, in case there is any transfer of shares or debentures that have happened, or any transmission of shares or debentures that have happened during the year, or any other securities during the year, the changes, all those changes need to be intimated in the form MGT 7. That means the transfers from A to B, B to C, or from others have to be intimated in the form MGT 7. Please take a minute, go through this, and then we proceed. Please go through this. It's very important. MGT 7. Okay. Next, the details of its promoters, directors, key managerial person, along with changes that have occurred since the close of the previous year. So we need to give details of all the promoters, directors, key managerial person. That means what was the opening number, how many people left the company during the year, how many people joined during the year, and what was the closing balance of the directors or promoters, and of that also the breakup. How many of them are residents, non-residents, and independent directors or non-independent directors. All these details need to be given. Then details of the meetings of the members or class of members, board and various committees, along with attendance details, needs to be provided. We need to give the date-wise details of all the meetings that have happened. It could be the meeting of the board of directors, it could be the meeting of the members, or it could be meetings of the special committees formed by the company. All those details have to be given date-wise, and also the attendance of each director or member who has attended, who is supposed to attend the meeting, and whether he has attended the meeting or not, has to be given in detail in MGT 7. And in case a particular member does not attend a meeting, that detail also has to be given. Then whatever remuneration is paid to directors and key managerial persons, it has to be broken up into the various parts given in form MGT 7 and entered into the annual returns of MGT 7. Then if the company has paid any penalty or punishment imposed on the company, its directors or officers, and details of compounding of offences and appeals made thereunder such penalty or punishment. During the year, if the company or any directors has undergone any penalty or punishment imposed by the company, then details of such punishment or penalties should be given in the form MGT 7. And also if any offences have been compounded and the appeals made by such company, all those details will have to be given in the form MGT 7. Then the matters relating to certification of compliance and disclosures, then also there has to be a certification by the director of the company that all the compliances relating to the company as per Companies Act 2013 have been complied with, and all the details that need to be provided have been given. This has to be certified by the directors of the company. Details in respect of shares held by on behalf of foreign institutional investors, including their name, address, countries of incorporation, registration, and percentage of shareholding held by them. So the last one, we need to enter details in respect of shares held by or on behalf of foreign institutional investors, including their names, address, country of incorporation, registration, and percentage of shareholding held by them. This detail is also required to be entered in form MGT 7. So if you actually observe, the form MGT 7 is a comprehensive form which contains almost all the information about key activities that have happened in the company in the particular financial year, and all these details have to be mandatorily entered and certified by the director and the company secretary in practice if applicable. Please take about a minute or two and read it, and then we proceed. These are very important terms about the inclusions in form NGT 7. We need to know it, so carefully go through this for another minute and then we proceed. All these details have to be entered by all the companies registered under the Companies Act 2013. Okay. The signing of the annual return and certification in case of listed companies. Section 92(2) provides for certification of annual return by the company secretary in practice. So in case of any company which is a listed company, along with the director, the annual return has to be certified also by a company secretary in practice. As per Rule 11 of the Company's Management and Administration Rules 2014, every company shall prepare its annual return in Form MGT7, and in respect of the specified listed companies as mentioned above, the annual return shall be certified by a company secretary in practice, and the certificate will be in Form MGT8. So for all listed companies, along with the MGT7 form, there also has to be a certification of compliance by a company secretary in practice, and that certificate will be provided in Form MGT8. In this context, a company secretary in practice who signs the annual return cannot certify the same. Although there is no specific provision prohibiting this, it will not be proper compliance for the same professional to sign as well as certify a document. So in this case, the Form MGT7 needs to be certified by a company secretary, and also a certificate from a company secretary in practice needs to be obtained and attached in the Form MGT7. So it is normal professional practice, even though there is no prohibition, that the person who is signing the Form MGT7 cannot provide this certificate. There is no prohibition to this, but it is considered as good practice in case the same person does not do so. Kindly go through this. Okay, now we talk about the penalty for contravention. Section 92(5) of the Companies Act specifies that if any person fails to file its annual returns under subsection 4 before the expiry of the period therein, such company and its officer who is in default shall be liable to a penalty of 50,000 rupees, and in case of continuing failure, with further penalty of rupees 100 rupees for each day during which the failure continues, subject to a maximum of rupees 5 lakhs. So if a company fails to furnish its annual return within the time prescribed by the Companies Act 2013, then the such company and every officer in default shall be punishable with a penalty of rupees 50,000 rupees, and in case of continuing failure, a penalty of rupees 100 for each day during which the failure continues, subject to a maximum of 5 lakh rupees. In case the company secretary in practice certifies the annual return otherwise than in accordance with this section and the rules made thereunder, he shall be punishable with fine which may not be less than rupees 50,000 but which may extend to rupees 5 lakhs. So a company secretary who certifies the annual return does not do so according to the section, or after giving due diligence or consideration, then he or she shall be punishable with a fine which shall not be less than rupees 50,000 but which may extend to rupees 5 lakhs. Rule 14 of the Company's Management and Administration Rules relates to inspection of annual returns, whereas Rule 15 deals with the preservation of annual return. As per Rule 15.3, copies of annual return along with the copy of certificates and documents required to be annexed thereto shall be preserved for a period of 8 years from the date of filing the annual return. So all these documents need to be kept for a period of 8 years from the date of filing the returns. Please go through this and then we proceed. Take about a minute more, go through this, then we proceed. Okay, let's take an example. FIG Private Limited called its annual general meeting on 30th September 2018 for laying down the financial statement for approval of its shareholders for the financial year that ended 31st March 2018. Alright. However, due to want of quorum, the meeting could not take place and was cancelled. The company has not filed the annual financial statements or the annual return for the year ending 31st March 2018 with the ROC till date. The director is of the view that since the annual general meeting did not take place, the period of 60 days for filing of annual return is not applicable, and thus there is no contravention of section 92. So let's discuss the question again. FIG Private Limited called its annual general meeting on 30th September 2018 for laying down the financial statements for its approval of its shareholders for the financial year ending 31st March 2018. However, there was no quorum on September 30th, 2018 and the meeting did not take place. So because the meeting did not take place, the financial statements were also not approved and the company did not file the annual financial statements or the annual returns for the year ended 31st March 2018 with the ROC till date. The director's view is that on 30th September the meeting really did not take place. So then it does not need to file its annual returns within 60 days from the date of holding the annual general meeting because the annual general meeting did not take place. Now we need to discuss whether the view of the director is right. Please pardon my straight lines as I'm using a pen tab and the lines are not very straight. Okay, so let's look at the answer. The director is incorrect in holding there is no contravention of the provisions of the Companies Act 2013. Section 92 states that every company has to file its annual return with the ROC in form MGT7 within 60 days on which the annual general meeting was held or the date when it must have been held. So in the above case, the annual general meeting of FIG Limited should have been held by 30th September 2018, but it did not take place. Thus, the company has contravened the provisions of Section 92 of the Companies Act 2013 and shall be liable for a penalty as specified in Section 92(5) of the Act. So the Act clearly says it doesn't matter whether you hold the AGM or not, but the annual return in form MGT7 should be filed within 60 days on which the 60 days from the date on which the AGM is held or should have been held. So in this particular case, the AGM should have been held on 30th September 2018. So if the company has not held the meeting, that is not the problem of the ROC. So the company has to file the form MGT7 annual returns within 60 days from 30th September 2018, and also a statement should be given as to why the AGM was not held. That also needs to be submitted to the ROC. Since the company has not done that, the company is in default as per Companies Act 2013 and shall be liable for penalty as specified in Section 92(5) of the Act. Please take about 2 minutes, go through the solution, and then we proceed. Kindly go through this solution in detail and then we proceed. Take another 30 seconds, go through this. Very important concept, annual returns. Let me proceed. Okay, prerequisites of a meeting. Please remember we are doing the management and administration under the Companies Act. So now the topic that we're going to discuss is prerequisites of a meeting. Before we move on to our next concept of types of meetings and the procedure to convene them, as per the Companies Act 2013, let us take a turn and swat the terms in which are important to know for convening a meeting. Let us discuss each of these concepts one by one in the following sections. But first, it is important to know the very basics of the meeting so that it helps us in better understanding of these terms as well. So first of all, the most common term that are going to be used while discussing the following term is general meeting. Now, it is very important to note that the term general meeting is used to describe a meeting of the members of the shareholders as per the provisions of the Act, whereas there exist other types of meetings as well, that is board meetings, that is meeting of the board of directors, and class meetings, that is meeting of a special class of person like creditors, preference shareholders, etc. The prerequisites of the meeting that we are going to discuss below are in general applicable to all kinds of meetings, although the time limits may differ and there might be specific mention of a certain meeting of that type. So like before we get into the prerequisites of the meeting, we need to know three definitions here. One is a general meeting, board meeting, and the special class meetings. So a general meeting is the meeting of the members or shareholders of the company. It can either be called an extraordinary general meeting or it can be called an annual general meeting. Then there is a meeting, a board meetings, which is nothing else but the meeting of the board of directors of the company. And then there is a class meetings, which means a class of special meeting of the special class of persons like creditors, preference shareholders, etc. Whereas the broad provisions for each kind of meeting will be the same, but the duration and the time may differ and a specific mention may be given for those type of meetings. So in this slide, we need to keep in mind what is the meaning of general meeting, what is the meaning of board meetings, and what is the meaning of class meetings. That is the meetings of special class of persons. So these are the three classes of meetings that are normally undertaken by a company under the Companies Act 2013. All right, take a minute, go through this, then we proceed. Okay, notice of a meeting. So always a meeting, whether it is a board meeting, whether it is a general meeting, or whether it is a class meeting, the first step towards the meeting is a notice. The Companies Act 2013 states the length of notice of calling a meeting. It states that in order to properly call a general meeting, a notice of at least 21 clear days before the meeting to all the members or legal representatives of any deceased member or the assignee of insolvent members, or the auditors and directors in writing or electronic mode as prescribed. So the Companies Act 2013 clearly says that where it is a general meeting, at least 21 days, clear days means no holidays or anything in between, notice should be given to the members of the meeting, the legal representative of any deceased member or the assignee of any insolvent members. The auditors and the directors in electronic mode or any other prescribed mode should be sent at least 21 days, clear days before the meeting should be sent to the following people. The mode of sending the notice, the said rule mentions that a notice may be sent through email or it could be sent through registered post as well. These days with technology coming in, it can be sent through email as well. The email should be addressed to the person entitled to receive such email as per the records of the company as provided by the depository. Also, the company shall provide an advance opportunity at least once in a financial year to the member to register his email address and the changes therein, and such request may be made by only those members who have not got their email ID recorded, or to update a fresh email ID, and not from the members whose email IDs are already registered. The notice shall be placed simultaneously on the website of the company, if any, and on the website as may be notified by the government. So, like I said, the first step towards calling any meeting is for issuance of notice. Now, for a general meeting, that is the meeting of the shareholders of the company, a notice should be sent at least 21 days before the meeting, to the either the members, the legal representative of the deceased members, or the assignee of the insolvent members, the auditors, and all the directors, in electronic mode, in writing, or through, it could be sent by post. These days, with the advent of technology, the rule mentions that a notice may be sent through email as well. Now, for email, what are the rules? The email will be addressed to the last known email ID of the member as updated in the records of the company. And also every year once, the company should give an opportunity to all the members to update their email IDs in case there is any change, or for the people who have not provided their email IDs to provide their email IDs. This opportunity should be provided at least once a year by the company to all the members. Then just a second. Then the notice shall be, or the notice along with sending an email to all the members, the legal representative of a deceased member, or the assignee of an insolvent member, the auditors and directors, by email. It shall also be placed on the company's website, and also on the website as may be notified by the central government from time to time, so that tomorrow people cannot say that they did not receive the notice, as the notice was already placed on the company's website as well as the website notified by the central government. Please take about a minute, go through this, and then we proceed. Okay, the length of serving notice, 21 clear days. Note that the section mentions that the notice shall be sent 21 clear days before the date of the meeting. It's quite obvious to question as to what the term clear days means. 21 clear days means the date on which the notice is served and the date on which meeting is to be conducted are excluded from sending the notice. A company cannot curtail by its articles of association the requirement of 21 clear days. So I'm sure all of you had the question as to what is 21 clear days. 21 clear days simply means the date on which the notice is sent as well as the date of meeting shall not be computed while calculating 21 days. So those days, the date of meeting and the date on which the notice is sent, will not be counted in case of 21 days. Then who is entitled to receive the notice of the meeting? It is all the members of the company, the directors of the company, the legal representative of a deceased member, the auditor of the company, and the assignee of an insolvent member. So these 5 classes of people are entitled to receive the notice of a general meeting. That is all the members or shareholders of the company, all the directors of the company, the legal representatives of the deceased member, the auditor of the company, and the assignee of the insolvent member. All of them should get the notice of a general meeting at least 21 clear days before the date of the meeting. All right. Take about a minute, go through this, and then we proceed. Okay, so like I said, the members, the directors, the legal representative, auditors, and assignee of the insolvent members, all of them are supposed to get the notice of a general meeting at least 21 clear days before the date of the meeting. Okay, in case you have any questions, please ask me. Okay, let's take an example. Mr. Khan filed a complaint against the company New Private Limited since it did not serve the notice to him for attending the annual general meeting. The company in turn provided a proof that they had sent the notice by way of email to Mr. Khan, inviting him to attend the annual general meeting of the company. Khan alleges that he never received the email. State whether the company is liable as guilty for contravening the provisions of Section 101 of the Companies Act read with the rules. So now let's discuss the question first. Now Mr. Khan is a member of the company New Private Limited. Now he accuses the company that the company did not send him the notice of the annual general meeting. He did not receive the notice, but the company says that they have a proof that they sent an email to Mr. Khan for attending the annual general meeting. Mr. Khan says, no, I did not receive the email. So now we need to check whether the company is liable as guilty for contravening the provisions of Section 101 of the Companies Act 2013 read with the rules. So let's look at the answer. Answer. As per Rule 18.3 of the Companies Management and Administration Rules 2014, the company's obligation shall be satisfied when it transmits an email. The company's obligation shall be satisfied when it transmits an email, and the company shall not be held responsible for the failure in transmission beyond its control. Also, if a member entitled to receive the notice fails to provide or update relevant email addresses to the company or to the depository participant, as the case may be, the company shall not be in default for not delivering it via email. So the Companies Act, Rule 18 of the Companies Management and Administration Rules 2014 makes it very clear that once the company proves that it has transmitted the notice over an email, then the company shall not be held responsible if the email does not reach the intended recipient, or if their failure in transmission is beyond the control of the company. Also, if the member fails to update his email ID or to change his email ID with the company from time to time so that the company knows about his latest email ID and contact details, the company cannot be held responsible for the same. Hence, in the present case, the company is termed as not liable, because the company is proved that the company has sent an email and the failure of transmission is beyond the control of the company, or it could be that Mr. Khan has not updated his email ID with the company. In either case, the company is not liable. Please take a couple of minutes, go through this example, and then we proceed. Any questions, please ask me. Go through this in detail because it's very important. Okay, now meetings held at a shorter notice. Generally, general meetings need to be called by giving at least a notice of 21 clear days. However, a general meeting may be called after giving a shorter notice than that specified in this subsection. That means lesser than 21 clear days. If consent in writing or by electronic mode is accorded thereto, in case of an annual general meeting by not less than 95% of the members entitled to vote thereat, and in case of other general meeting by members of the company holding, if the company has a share capital, majority in number of members entitled to vote and who represent not less than 95% of such paid up share capital of the company as gives the right to vote at a meeting, or having, if the company has no share capital, not less than 95% of the total voting power exercisable in the meeting. So now this provision is also important because see, normally for a general meeting we need to give a notice of 21 clear days. 21 clear days simply means the date of the meeting and the date of sending the notice has to be excluded. So 21 days notice has to be given for calling an annual general meeting or an extraordinary general meeting of the members of the company. But sometimes due to an emergency, the company may not be able to give a notice of 21 clear days. So in such a case, the company may call a general meeting at a shorter notice, that is less than 21 clear days, subject to the following conditions. In case of an annual general meeting, there should be an approval in writing should be given by at least 95% of the members entitled to vote. And in case, so in case of an annual general meeting, 95% of the members entitled to vote should give an approval in writing that they are okay with the meeting being called at a shorter notice. And in case of an extraordinary general meeting, the approval should be given by at least 95% of such paid up share capital of the company as give rights to the voting. And in case the company has no share capital, not less than 95% of the total voting exercisable in that meeting. So in case of an annual general meeting, an approval has to be given in writing by at least 95% of the members present in voting. And in case of an extraordinary general meeting, an approval in writing should be given by at least 95% of the paid up share capital of the company as gives the right to vote at a meeting. And in case the company does not have a share capital, approval should be given by at least 95% of the voting power of the members exercisable at the meeting. In such a case, a general meeting can be called at a shorter notice than 21 clear days. Okay. Then we have contents of the notice. A valid notice must state the day, hour of the meeting and the place of the meeting, and shall contain a statement of business to be transacted at that meeting. It must be issued on the authority of the board of directors under the name of the official. So a notice has to be sent by the board of directors to the members, to the legal representative of the members, to the assignees of an insolvent member, the auditor or the directors, and it shall clearly mention the day, date, time, and the location of the meeting, and also the agenda of the business that is to be transacted at that meeting. That notice should be signed by the board of directors or one of them on behalf of everyone and sent to the recipients. Omission to send notice. Section 1014 states that any accidental omission to give notice to or non-receipt of such notice to any member or any other person who is entitled to such notice for any meeting shall not invalidate the proceedings of the meeting. This essentially means that the omission must not be designed or deliberate. Failure to send notice to a member under a belief that it will not reach him at the address mentioned in the register of members is deliberate and not accidental, even if the belief is based on a mistaken impression. So the notice should be sent to every recipient who is supposed to get the notice. Now, there might be a case where the company might fail to send a notice by mistake. In such a case, the proceedings of the meeting will not be invalidated. The meeting will be a valid meeting and there might be an action taken against the company. But if the company is deliberate in not sending a notice to a particular member, then the company and every officer in default shall be held liable for such a breach. Applicability of Section 101 to private companies. Section 101 shall apply unless otherwise specified in respective sections or the articles of the company provide otherwise. Notification dated 5th June 2015. This exception shall be applicable to a private limited company which has not committed a default in filing its financial statements under Section 137 or annual returns under Section 92 of the Act with the registrar. Please take about a couple of minutes and go through this and then we proceed. take about a minute more, go through this. Okay, so now with that we come to the end of the session on management and administration of companies under the Companies Act 2013. Please note this is not the code here. The code is Prathik, Prathik. This is while you are subscribing to the Plus platform of Unacademy. Do not forget to use the code Prathik, Prathik, to get a discount of 10% on the listed price. I would like to summarize that again once for your benefit. Okay, so the Plus platform of Unacademy is a subscription-based model which gives you daily live classes where you get to chat with your educator, engage in discussion, ask your doubts, and answer polls, all while the class is going on a real-time basis. The Plus platform of Unacademy conducts live tests and quizzes which help you evaluate your preparation with regular mock tests and quizzes, and also get detailed analysis on your performance to identify your strong areas and your weak areas so that you can focus more on your weak areas. The courses provided under the Plus platform of Unacademy are structured courses in the sense that all the courses are structured in line with the exam syllabus to help you best prepare for it and to ensure to the maximum extent possible that no important part of the syllabus is missed out while your preparation is happening. And lastly, and most importantly, the Plus platform of Unacademy gives you unlimited access to all the live and recorded courses to watch from the comfort of any of your devices at any time you want, at any location you want. So I encourage you and request you to become part of the Plus platform of Unacademy as soon as possible, and prepare better for the various examinations that you are interested in. For those of you who have downloaded the Unacademy Learning app and are using it, I thank you very much, and I request you for your continued support. For the ones who have not yet downloaded the Unacademy Learning app, I request you to go to your Play Store and download the Unacademy Learning app from your Play Store and register on it using the OTP that will be sent to your mobile. It's a very simple procedure. Now what happens once you register on the Unacademy Learning app? The Unacademy Learning app opens the gateway to the world of courses, resources, and content that Unacademy has to provide to you, and all this can be carried in your pocket and can be accessed at your convenience, at your fingertips. You can use it whenever you want and at whatever time you want and location you want, and basically eliminate wasting any time and utilizing that time to better prepare for your examinations. So for the ones who are using the Unacademy Learning app, thank you very much. And for the ones who are not yet using the Unacademy Learning app, I request you to download it and register on it using the OTP. Now, coming to the Plus platform and the packages provided by the Plus platform of Unacademy for the CA Foundation and Intermediate subscription are as follows. The packages are for 1 month, 3 months, 6 months, 12 months, and 24 months. The 1 month package costs you rupees 3,500. The 3 months package costs you rupees 8,750. The 6 month package costs you rupees 14,000. The 12 month package costs you rupees 17,500, and the 24 months package costs you rupees 21,000. Okay. Now, when you make the choice of your subscription package, please do not forget to use the code Prathik, Prathik, to get a discount of 10% on the listed subscription price. I repeat, Prathik, to get a discount of 10% on the listed subscription price. So the after discount price of the various packages of the Plus platform are: the 1 month package costs you rupees 3,150, the 3 month package costs you rupees 7,875, the 6 month package costs you rupees 12,600, the 12 month package costs you rupees 15,750, and the 24 months package costs you rupees 18,900. Now, while you're free to make the choice of the package you want, I will personally recommend to you the 12 months package or the 24 months package for two reasons. The cost, because of its cost effectiveness, if you see the per month cost in the 1 month package, and the per month cost in the 12 months and the 24 months package, it is almost less than 1/3 of the same. So there you can get heavy savings there. And also, as the CA foundation and intermediate course is provided to you under one package, normally it takes about a year's time for you to prepare for your CA foundation and your intermediate examination. So a 1 year or 12-month package makes more sense for you in terms of cost effectiveness and also for the duration of the course. Having said this, you're free to select the duration of your choice and the package of your choice, but whatever choice you make, please do not forget to use the code Pratik to get a discount of 10% on your listed price. Okay, and for those of you who have not followed my profile on Unacademy, yes, I request you to go to the Unacademy app and look for my profile, that is Prathik Gupta, PrathikGupta, and click on the follow button to get live updates about the timings and the topics of my sessions so that you can attend my sessions on time. I would love to have you in my sessions, and it's a privilege to address your concerns and discuss with you on any topic relevant to the subject. You can also go to the Unacademy app and access the various sessions that I've taken on various topics, including Companies Act and other laws, Income Tax Act, basics of accountancy. All these sessions are present there. You can go through them, access them, and give me your feedback. And in case you have any questions, you can ask me. So with this is Prathik Gupta signing off. Thank you so much for being a wonderful audience, and I will see you very soon once again. Thank you.